Good afternoon and welcome to FBN Charting Points, a technical look at ag markets. My name is Brian Como. Today is December the 7th, and we are bringing this to you today ahead of the USDA report tomorrow, which is the first thing that we're going to talk about. But first, we'll get through the legal paperwork here we have to do. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. The material is provided as is and for informational purposes only. It is not intended to be a substitute for specific financial, trading, legal, or tax advice. Neither Farmers Business Network nor any of its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the statements or any information contained in the material, and any liability is therefore expressly disclaimed. Past results are not necessarily indicative of future results. All right, tomorrow is the USDA report that drops at 11 a.m. Central Time. That would be 10 o'clock in Alberta. And I think I'm going to start off with talking about the big rock that I think that people are going to be looking at in the USDA tomorrow. And I think one of those things is going to be the number on the Brazilian soybean side. So last month, the USDA estimated or maintained their estimate of soybeans at 163,000 tons. As you can see by this chart here, that is by far a record large amount of production. I think what's, as you can see here, the average trade estimate for tomorrow of the USDA is 160. So we're still talking about a record large crop of South American soybeans, particularly Brazilian soybeans, even despite some of the weather problems that they've had. Last year, as you could also see, was also a very large record crop, 158,000 or 158 million tons, sorry. So we're still tracking, at least as far as the average trade goes, above that. Now, as you can see here, there are some estimates that bring the potential total down below 158. I think that most of these low estimates are from smaller boutique kind of analysts. Not to say that they're wrong or anything like that, but I do think that at this point in the crop year, I think it is a safe bet to make that the USDA will not shave off too much. Now, if they do tend to shave off, I think the major catalyst point will be if they start to shave the crop to where it looks like it is smaller than last year's crop. So if we get a number 158 or lower, because I do think that whatever the number is, I think that the market is going to assume that there are further revisions downward to come in the future. So, if the USDA reports something, at 158 million tons or lower, I think that would be a very bullish report from the USDA, and it could rally markets. I do find it actually hard to make a case for there to be a majorly bearish report on beans from Brazil in this report. Now, the only thing that I think could potentially push beans lower after the report is a bit of a buy the rumor, sell the fact kind of trade. Although I don't know, I'll show you the chart in a little bit, but I don't know if that's really going to be something that comes to pass. There could be something if, let's say, the average trade guess is 160, but maybe in reality, there's a whisper number that is somewhere near 158. If the USDA does come in at 160 or 160.5 or, something along those lines, it could fade the price a little bit. But I really don't see a huge bearish risk in the USDA report on soybeans based on Brazil. If anything, there might be a little bit more on the US side, potentially adding to either U.S. production or ultimately what we want to see is, in order for a bearish response, is a major addition to U.S. ending stocks, which kind of brings me into my next point here. So the USDA ending stocks are essentially called to be a little bit lower, like 200 or 2 million bushels from 245 was the October report, down to, or sorry, this should say November here. Let's see if I can write this. how classy that is. All right. So that's, the 245 is from the November report. 243 is what they expect this month. So a small reduction. So if we do see a bit of a climb up on soy ending stocks in the US, I think there could be a bit of a fade in the price. But that's where I see the risks in soybeans. I see obviously the opportunities in soybeans coming from a larger than expected cut to soybean ending stocks. So again, the average trade guess for soybean ending stocks is expected to fall a little less than 2 million tons here. So some of the cut from Brazil, sorry, is going to be absorbed by lower demand, is what that looks like at this point. So kind of looking through some of the other numbers here, corn is called very similar in the US as far as ending stocks go. Wheat is called unchanged. So again, there could be some volatility if those numbers come in different than what we see, because there is essentially no change expected there. There's also very little change expected in wheat. In fact, a little bit higher wheat ending stocks that could come from some small revisions higher in some areas like Russia or the Black Sea area. Corn is called globally down a little bit, which also makes sense as the price has been pressured lower and there has been some demand that has come back to the market as a result. So small revision down in grain ending stocks. But other than that, no major changes expected on the USDA side. And when that happens, it does open up the possibility for some surprises. And that, unfortunately, it could be either way, bullish or bearish surprises. Because the market is largely not expecting a lot of change. If the USDA does amend something a little bit more than expected, then it could create a bit of a surprise. I think the first number people are going to be looking at, though, is the Brazilian production number. All right, getting into what happened into the end of the day today, which is kind of the first full day session prior to USDA. Soybeans and the soy oil complex, or the oilseed complex, had a very good day today. Here is soybean oil. It was the front runner of the market. It gained, I think it was 3.7% into the end of the day. It did come right up to test this 20-day moving average here. So is that a good day? Yes. Is that a trend-changing day? Doesn't look like it on the chart yet. Didn't make a new high. Didn't break the 20-day moving average. Really didn't break, even a short-term trend line. So, it's hard to say that that's going to be a turnaround. Even the candle formation there doesn't look to be a turnaround. The only thing that does look positive here is the fact that we tested a higher low in soybean oil. So in order to kind of prove itself as kind of a turnaround, now we want to see it come back and start to make new highs, right? A bullish market produces lower or higher lows and higher highs. So this next push needs to take us up into this area in order to kind of cement a more longer term bullish thesis. But what could be happening, and as you can see here, there's a couple of moving averages that are converging. We might be moving soybean oil into a more neutral pattern where we hammer down towards lows and hammer up towards highs. So that could take this up into the 53 area. That would give some of these other commodities a boost. One of those other commodities would be canola. Now, canola did look pretty good from a technical standpoint in one way, which is that there's kind of an outside day candle formation here where today's candle on the up completely eclipsed yesterday's trade when it punched down. That's about the only thing that looks bullish on this chart, however, though, because we talked in our last report about some of this monthly chart support that was breached yesterday. It traded down lower again today before rallying. So there is still some appetite to push this lower. I think, obviously, if there wasn't a move in soybean oil today, we probably wouldn't have seen this reaction from canola. So from a technical standpoint, this still looks like a bearish chart, although today's candle is one thing that is, if you want to hang your hat on a bullish thesis, that's about the only thing you could do on this chart at this point. The 20-day has turned lower again. The next level of support is down here at around 617 on the January, which would be those May lows. So there's still a strong possibility that we will trade down to there during this kind of sell-off move or this flush. That's really all I could say about canola at this point in time. Our last sales recommendation was made on up in this period here. We wanted to avoid kind of this downturn. So if you are, a little bit nervous about where the market is going, or you know, you're getting to the point where you need to make some sales either before the end of the year or into the beginning of January, talk to your, farm marketing advisor. They'll be able to help you establish a plan so that you don't have to feel like you sold into these lows here. If that's a concern for you, there are options available to you to keep yourself in the market while reducing risk or eliminating risk completely. So have those conversations. And I know a lot of them are happening right now. I've had a lot of conversations on the phone over the last couple of days as the market has kind of slid back down through support here. So don't be afraid to pick up the phone. All right, moving on to soybeans. So here's what we're looking at coming into the USDA report tomorrow. It did kind of trickle below some of this support here to this week. I think the market is still trading a little bit of a bias towards, improvement to the South American crop, although there is a lot of, news weighing on that, whether it's, ripping up fields to replant, something else, or early plant corn or something like that. I mean, there's always those headlines that can come. I always look at the pricing to show me where the proof is in the pudding, because if people really believed that the crop was still at major risk, I think there would have been a significantly more of a rally through this week. We are seeing on the technicals, at least the 20-day turned lower and is now, about to breach the 100-day moving average here. This market rallied today, but failed to come up to any of the four major moving averages. So really, this looks a bit like a dead cat bounce, and I would say that this still looks concerning. The only thing that would keep me from selling this today would be kind of wanting to know what the USDA says tomorrow. But that could push it back. Best case scenario, I think the USDA report pushes it back up into this 1330 area. Worst case scenario is that we come and look at this level here. We're only talking now like 20, 30 cents or so. So I do think that, even on a bearish push, I think this support down here at about 1270 will hold. But if it does trade below that mark, that would be a very bearish signal. So, this will be an interesting one to watch tomorrow. And I think we might be able to get a little bit more of a directional bias after the report, depending on what happens. Even a neutral response tomorrow would give us a bit more of a bias as to where things could go and whether or not we want to continue to protect prices here. All right, moving into some of the grains here. I just put corn up here just because it is a pre-USDA, but this market is pretty sleepy at the moment. Moved down to make a new low at the end of November. Has kind of rallied back from that now. Again, this market looks pretty neutral, and there is potential, of course, that if the USDA does report something bearish, we are getting pretty close to this resistance line here of the previous high in the middle of November. So if a USDA report can push it back towards those areas, that would be a positive, I think. If it is a little bit more bearish, I think that we'd have to see it break the 470 or so support here in order to get bearish. So we continue to be neutral on corn even as we move towards the USDA. Now, wheat's been an interesting story this week. There's been lots of sales activity. About 1 million tons or a little bit more than that, I think, has been sold to China in the last week or so. And that has really helped rally some of these wheat markets, particularly the winter wheat markets. Today's close was positive as well. We saw a bit of volatility into the end of yesterday where it faded a lot of its gains, but kind of made some of those back. So this is the nicest close that we've seen since, as you could see, somewhere back from August. So there is some potential resistance that comes into play here. We did make a sales recommendation this week, particularly knowing that most of the grain that we have at risk is hard red spring wheat. So we were looking at Minneapolis technicals a little bit more closely there. But we're kind of getting into that zone where you don't want to get too cute about trying to peg the high on a rally here. If it is, if the Chinese demand story gets priced in and we don't break to new highs here above 670. That's a good place to sell. And so that's why we took some of that risk off the table. Here's what the HRW looks like. Again, it punched above some resistance yesterday and then faded and even closed at a loss yesterday. It did make some of that back again today, but didn't move above that resistance level. So, this punch above this level could be a bit of a head fake here. Again, coming into a USDA report. If it is bullish, if wheat's bullish, it'll push it, above this area. That would give us some more conviction on a next higher move. And there's lots of room here in a bearish market that there's still going to be support down at the $6 area. So, I wouldn't necessarily be too worried about this market either, particularly if you did take some action this week in making some sales. Here's the Minneapolis, and again, this market kind of rallied up into this area close to previous highs and then failed. It probably was the one that failed. It looked to the poorest coming out of yesterday's trade. It hasn't gained back nearly as much as some of the other markets either. I look at this market as being a little bit weaker than the other markets. The demand that's coming from China is largely winter wheat, not the high protein wheat. So although, Minneapolis is hitching along for the ride, the gains are definitely not as aggressive, and as a result, wanted to make sure that some of that risk was taken off the table. So we're about at an even position now, right? Our official recommendation for 2023 is 50%. So we're kind of sitting on the fence with one leg on each side, seeing what this market can offer us. If we did get a bullish push, my next kind of sales recommendation would be somewhere up in this, call it $7.80 to $8 area. If we could rally into that next area of resistance, we would be looking at adding another piece of coverage there. All right, lastly, I did want to talk a little bit about the Canadian dollar. It does affect wheat a little bit as well. Through much of November and into December, we saw the Canadian dollar rise pretty spectacularly. It traded above 74. That took a lot of steam out of the basis, the cash basis here in Canada. Couple that with the losses that we had seen throughout, the latter part of November. Basis had taken a bit of a hit. We're now starting to see the market cool off. Canada's interest rate announcement came out yesterday. They stayed at rates for the fourth time in a row at 5%. There are some economic figures that look promising to continue to push inflation and potentially interest rates lower. But at this point, that is a net negative to the Canadian dollar. Now, a net negative to the Canadian dollar would be good for us generally. But did want to point out this chart. This is a pullback. I don't know if this is necessarily a trend reversal. In fact, it kind of came and tested that trend support today, and then rallied back to at least at the time of this writing. The market's still open, of course, for the currencies, but it did eke out a bit of a gain on the day. So might have been a pullback in the Canadian dollar. We might see another surge higher if this trend is still in place, which would not be beneficial to particularly wheat basis levels in Canada. All right, that's what we had for you today. Thank you for watching. We will have some information on the USDA out tomorrow. We'll send to our advisors to send off to you. And thanks for joining us. We will see you again next week.